Hi and welcome to another FIS fuel oil instalment and roundup for the week. Unsurprisingly, the market has been relatively stable for the oil market. We thought we might see some positive momentum at the beginning of the week, following on from the increased rig count that we saw on the Friday week ending the 16th, where rigs increased by 7 to 439, which was the highest level since April 2020. But the Monday's trading was relatively static, with Brent continuing to trade around the 67 levels. This did start to push up more so on the Tuesday, resulting from the weakening dollar against the basket of indexes. The dollar reached a 6-week low against the other major currencies, and this actually pushed the Brent up to around the 68 levels, with the WTI trading above the 64 levels. Wednesday was more of a dramatic day. We saw 2% drop in the market. This was a result of the US passing a bill that would enable them to look into the price manipulation from the OPEC members with regards to how they have handled the production cuts during the time of the pandemic. We have seen various bills passed like this in the past by the US, which have amounted to very little. So for me, I feel as though this was very much a knee-jerk reaction to the headline news that came out on Wednesday. Unfortunately, the stats from the EIA as well did nothing to buoy the market. There was small builds in the crude stocks, as well as the gasoline, and only a small drawdown in the distillates. So on the day, we closed down at 65 on the Brent levels and around 61 on the WTI. In terms of the market overall, it has started to trend lower from the start of the week towards the end of the week. We do feel as though this is very much a case of the result of the increased coronavirus case numbers that we are seeing in India now, with over 300,000 per day. The mutation of the virus is obviously now a real concern, with the belief that the infection rate and the vaccine effectiveness is going to be greatly reduced. So India has been put on the red list for the UK, and there is a real genuine concern globally that if this variant does start to spread, it's going to have a significant impact on the demand levels for the market. With regards to individual products, we have seen over the course of the week the 0.5 fuel oils for Sing and barges. They have dropped by about $10 from start to finish, with the FOGO spreads holding relatively steady, trading between -62 and -60 for the barges, and -36.5 to -34.5 on the Sing FOGO. With regards to the high sulfur crack, it's pretty much the only market that we've seen strengthen this week, no doubt because of the seasonal demand from the UAE, the increased usage of the high sulfur fuel oil, which will be used in their aircon systems. So there's no surprise there. I think looking forward into next week, we've got the OPEC ministerial meeting. Again, the timing of this is causing some concern in the market, due to the fact that OPEC already had a meeting at the 1st of April, which had laid out the production quotas for the next 3 months, with the idea being of increasing production by the 350,000 barrels from May onwards. Speculation that they are going to be holding this meeting maybe to review the market, keep an eye on things, maybe even reevaluate the situation of the production levels due to the increasing concerns over the Indian variant and the increase in the COVID numbers. So that's pretty much the roundup for this week. That's it from me. Wish you all a good weekend. Speak to you soon. Bye bye.